morning, and thanks for joining our webinar presentation today. Our topic today is pensions with American National. The presentation will be on the one-stop pensions made easy, and our presenter today is Jonathan Sachs with American National Pensions. He'll be joining us. He's on right now, but he'll be presenting here in just a few minutes. And I want to remind everyone that our presentation today is being recorded. And if you do have questions, please type those in, and we'll be glad to answer those during the presentation. So with that, I just wanted to talk a little bit about some things going on here at Financial Brokerage. My name is Jim Guinan. I'm an annuity sales manager here with Financial Brokerage, and want to tell you a little about Financial Brokerage very briefly. We've been around since 1995. We're an independently owned IMO here in the Omaha, Nebraska area, and we work with producers on their life, fixed annuities, long-term care, disability, hybrid products, and American National is one of a number of carriers that we work with on multiple lines. We represent or work with them, I should say, on life, annuity, and, of course, the pension program that you're going to learn more about here. At Financial Brokerage, we certainly value your business. All of our marketing staff here and much of our management is licensed and has done business in the field, including myself. So we value your business, and we understand what you go through. I do want to tell you our website address so that you can learn more about us if you don't already know, and that's www.financial-brokerage.com. And you can learn more about us, our history, our incentives. I do want to mention briefly that our Shared Success program continues to move forward this year. We're offering 2 new incentive trips. They have not been announced yet, but for 2021, there will be 2 destinations. And the great thing about our Shared Success program is that if the incentives are not to your liking or they don't work as far as scheduling, you also have an option, as you always do, to receive cash for your business. So we want to reward you for what you place with us, and that can be done either through joining us on an incentive trip or by taking advantage of the cash option. So again, check us out on our website. There's a lot to learn, and if you have any further questions about that, let me know. Also, in regards to annuity, which is my area of specialty, we do currently represent over 20 top-rated companies in the fixed market. So with that, I'd like to turn the presentation to Jonathan Sachs, a pension plan designer at American National Pensions. And so it's on you, Jonathan.
Thanks, Jim, and thank you very much for having me today. And good morning, everybody. My name is Jonathan Sachs. I am one of the plan designers here at American National, as Jim said. American National is based in Galveston, Texas, just south of Houston. And we've been around for over 100 years, so we're a very conservative company, and we've just been offering our suite of products for a very long time. But today, we're actually going to focus on qualified retirement plans. We're going to show you both the 401k plan and defined benefit plans, talk about sales strategies, how they work, what they look like, show you a couple of examples. And at the end, if time permits, we will answer the questions that come in. So please, if you have any questions, do jot them down, and when we have time at the end of the presentation, we will address the questions. So without further ado, let's talk about qualified plans. Right now is really a good time, not only for us to be having this conversation, but for you to be having this conversation with your clients, whether they are future clients and prospects or whether it's your current book of business, meaning going and talking to clients that you've already worked with. And the reason is because, well, it's tax time. So everyone is very, very conscious of not only their obligation, but, the fact that it's really time to see if there's something that we can do to help. Also, there's been a lot of law changes. The Secure Act has changed the way retirement plans are enacted in a very fundamental way, and it's a wonderful advantage. The thing about the Secure Act, and the main thing that I'm talking about, is now you can set up a qualified plan retroactively. It used to be that only an IRA could be set up retroactively. And if you wanted a qualified plan, it had to be set up no later than the end of the year, 12/31. So my Decembers were just crazy busy. Well, now we're in the process of setting up 2020 plans in the first quarter of 2021, thanks to the Secure Act. So here's an opportunity for business owners to get massive tax deductions and fund their retirement on a prior year basis. And as long as you've not filed your taxes, meaning as long as the client has not filed their taxes yet for 2020, this window is open. There's a little bit of gray area on how long the window is open, meaning what happens if you filed an extension all the way through past August. Past August, our opinion is you can't do it. So we're pretty much looking at summer as a deadline. And as we find out more information from the government and how they're going to do later openings, meaning past the summer, we'll definitely communicate that. One of the other things is that's interesting is they raised the required minimum distribution age to 72. It's a really good thing for the business owners. For the employees, it's a non-issue unless they were trying to get their money out earlier with the old RMD age. When it comes to qualified plans, I know we just talked about the opportunity to offer something for the prior year, but there's really some fundamental advantages to having a qualified retirement plan. The biggest one that most people look at is that tax deduction. The tax deduction that can be afforded in a qualified plan is sometimes the largest tax deduction your client or small business owner will ever see. They can be that big. But that's not the only reason why these plans are set up. Sometimes they do it as a retention tool. Sometimes they do it as a recruiting tool. Sometimes they have to put the plan in place because their employees are clamoring for it, and if they don't, their employees are going to walk across the street and go to a competitor. So why somebody sets up a qualified plan actually is normally to meet all of those requirements. But if one stands out, then that's the selling point that we're going to pursue. At American National, we offer both defined benefit plans and defined contribution plans, meaning that we offer your defined benefits, your 412, and your cash balance. That's the defined benefit side. And on the defined contribution side, it's the ubiquitous 401k plan. All of our 401k plans are Roth 401k plans. We're definitely going to dive into that a bit. And then your safe harbor and your new comparabilities are your more specialized, excuse me, and we do take over existing plans. The other thing about setting up a retirement plan is our laws continue to change. But I am still running into small business owners that have SEP and simple IRAs. I tried to show them the benefits of setting up a 401k or a defined benefit plan, and their response is, well, my CPA told me that I can't have one of those plans. Well, the law that the CPA is referring to is over a decade old at this point. That is no longer the case. As long as your client is not a government entity, they can have a qualified plan. I've set up qualified plans for churches, 501c3s, hospitals. It doesn't matter. You can be a sole proprietor. Doesn't matter. Pretty much anybody now can have a qualified plan. Now, with that being said, at American National, we specialize in the small business market. So your one-person plans, we do them every day. Our niche market is 25 lives or less. So basically, small companies is where we concentrate, and it's where our competitors typically don't concentrate. Our competitors are normally after your larger plans. Now, we will go up to 100 lives, and on a case-by-case basis, we'll exceed 100 lives, but those are very one-off plans. Yeah, last year I set up a plan with 180 individuals in it, so it can happen. But again, our concentration is 25 lives or less. Now, being with 25 lives or less, we need to make sure that when we're designing something for the client, it meets their needs and their goals, especially with a smaller plan like this. So let's take a look at a couple of plan designs. We're going to go into a little bit of detail of the different types of plans, and really show how a qualified retirement plan can benefit your client. The first thing I want to talk about is that Sep Ira. You're going to run into a lot of clients that have a Sep. Well, just like you going visiting to a client that already has an annuity or a life policy, you don't say, oh, you already have one. Well, okay, thank you. Bye. Don't walk away. Okay, great to have a plan. Let's review it. Who knows when the last time it was reviewed, right? Maybe when they set up the plan, they had one employee, now they've got 10. Business has changed. Goals have changed. Objectives have changed. Maybe their plan needs to change as well. So we will review any plan that they currently have. If they do have a Sep Ira, there's almost a certainty that we can show them something better. And that's what this illustration is showing. In the first example, we're looking at somebody that's making $50,000 a year in W-2 income. Now, the reason why I'm showing age 50 is because at age 50 is the catch-up provision. It turns on at age 50. That catch-up provision is $6,500. A 401k plan has two main forms of contribution. One is the employee making a deferral. That employee deferral is a contribution that they make directly out of their paycheck. The other one is the profit sharing contribution or the employer contribution. So the employee can put money in, the employer can put money in, and if you're dealing with a single person, they're actually wearing the same hat. They're both the employee and the employer. The profit sharing portion of a 401k plan is limited to 25%, which is exactly what a Sep Ira is. A Sep Ira is limited to 25%. So the 401k can do everything that a Sep can, but it can do a lot more. It can utilize the catch-up provision, which is not available on a Sep, and it can utilize that employee contribution, that deferral, which is up to 100% of your income, not to exceed $19,500. So in a scenario where I have a 50-year-old making $50,000, comparing the Sep to the 401k, and we're talking fully funded here, a fully funded 401k versus a fully funded Sep Ira, I can trounce their contribution. I'm putting in more than 3 times what they are. That means their tax deduction is 3 times as much. If we take it, we look at somebody and we double that income to $100,000. Same scenario, I'm still killing it. Now I'm doubling it, but still, it's not that I'm beating it for about 5%. It's not that I'm beating it by a couple $100 bucks. I am more than doubling and tripling the benefit available to them just by doing a little switch. We're moving from one IRA to a qualified retirement account. Main thing here is just because they have a plan, don't walk away. Let's take a look at it. Let's see if there's something that we can do. Maybe we can show them better investments like we did on the previous slide, or maybe it's just service and cost. So it just depends. The point is, every time they have a plan, give us an opportunity to show them something better. So that's the 401k. But what I really want to talk about is the Roth 401k. All 401k plans here at American National are Roth 401k plans. I call the Roth 401k the great equalizer. Why? What is so special about a Roth 401k? Well, to know that, we have to know about the Roth IRA, because that's the other side of it, right? Well, one of the things about a Roth IRA is the contribution limits, they're okay. Catch-up provision, hey, at least they have one. But it's nothing spectacular. But the real problem with the Roth IRA is the government jumped in and said, you know what? We're going to put an income requirement on Roth IRAs. Basically, what the government said is, hey, if your client has the audacity to make too much money, guess what? No Roth. So if you've got an affluent client who's looking for qualified tax-free retirement income, the Roth IRA is not the solution because they can't make a contribution. Along came the Roth 401k, again, due to law change. The great things about the Roth 401k is, first of all, the contribution limit. It's not $6,000, it's $19,500. The catch-up contribution is not $1,000, it's $6,500. That's a lot larger contribution to give you qualified tax-free retirement money on the back end. The big kicker here, though, is 401k plans are governed by ERISA, meaning government law. Well, the government is not allowed to discriminate. Therefore, the income requirement disappears. So now, if you've got a client making $1 million a year, it doesn't matter. You got a client making $500,000 a year, doesn't matter. $5 million, again, doesn't matter. Now, everybody has access to Roth dollars. So what's so great about Roth, right? Well, the thing about Roth contributions is when the money comes out, as long as it's a qualified distribution on the back end, it's tax-free. Now, I don't know what your tax bracket's going to be when you retire. I don't know what the tax rates are going to be when you retire either. I mean, nobody has a crystal ball, and if anything, 2020 should truly show you that you never know what's coming around the corner. Here is an opportunity to put up a Roth 401k plan, aggressively funded, and get that qualified tax-free retirement money. Tax-free retirement dollars. Where else can you find tax-free retirement dollars? The only other place I know where you can get a tax-free retirement dollar is life insurance, right? You overfund a life policy. Pick one, IUL, whole life, overfund a life policy. You overfund a life policy and then, start withdrawing, then switch to loans. That is a lot of people's retirement solution. Nothing wrong with it, and I'm not here to tell you not to do it. Because one thing that we've been taught from the very beginning of being in this industry is a word called diversification. Do not put all your eggs in one basket, right? If your client is overfunding a life policy, you know what I know about your client? They've got disposable income. Chances are there's still some sitting on the table that you don't know about or can't get your hands on. So here's an opportunity to do both. Let the one plan complement the other. Increase the amount of tax-free retirement income you will receive. The other thing about this is, if you're going to use a life policy as a pension plan, your client has to be insurable, and you still have to deal with the cost of insurance. Neither one of those apply here. So whether they have one or whether they don't, here is an opportunity to offer your client tax-free retirement money. The Roth 401k is a wonderful tool, and it's going to be the vast majority of the plans that you're going to set up. But now I want to move to the other side. And what I mean by that is I want to move from defined contribution to defined benefit. What I'm showing here is a traditional defined benefit plan. Traditional defined benefit plans they've been around for over 100 years. They've been around longer than the 401k, as a matter of fact. And they're great plans, but 20 years ago, 30 years ago, all in the headlines. Defined benefit plans are closing, underfunded, frozen. They're running into funding issues. And defined benefit plans almost just flat out disappeared. Because of legislation change and law change, the amount of defined benefit plans that are being put together these days, it's a bonanza. It really is. The opportunities are massive. Now, part of that might also be because, Americans are aging. Our baby boomer population is massive. The defined benefit plan gives you an opportunity not only to save for retirement, it offers large tax deductions, but it gives you that possibility of accelerating your retirement contribution. Instead of putting $10,000 or $20,000 a year into a 401k plan, take a look at this one. In this one, we're putting in six figures. So if you look at this, the total contribution is $116,000, and I'm rounding here. How much of that $116,000 is tax deductible? The answer is all of it. If you look at the breakdown, the tax deduction alone is going to cover the cost that you have to put in for the employees. Not only that, but because of the way defined benefit plans work and the fact that the owner is older than their employees, the owner is going to retire before the employees will, and therefore the employees will not receive a full benefit. Also, people don't work for a company for 30 years anymore. You're lucky if your average is 5 years these days. People are constantly moving jobs. Well, if you're going to be with a company for 5 years and they have a defined benefit plan, you'll be lucky to get any benefit at all. So in this scenario, the owner's receiving over 80% of the benefit. But again, could you imagine going to a small business owner and saying, hey, I'm going to let you fund a qualified plan. I'm going to give you a $116,000 tax deduction. And oh, by the way, you still get to keep 87% of those dollars. First of all, to give a small business owner a $116,000 tax deduction, the greatest thing since sliced bread. Short of them depreciating a building or a fleet of sales vehicles, you don't get those types of tax deductions often when it comes to small business owners. And sole proprietors, especially, taxes are not friendly to them. They're always looking for another tax deduction. So the problem with the old traditional defined benefit plan is that contribution was required every year for the life of the business. Well, prior to last year, I had no problem asking if people had an idea of where they'd be in 10 years. Can you fund this plan for 10 years? Nowadays, especially after last year, can you imagine asking somebody where they're going to be in 10 years? You want to talk about absolutely no idea. Just throw a dart at a board because that's about as lucky you're going to get. So defined benefit plans really took a big hit. The law change that I'm talking about is what they did is they came out and they said, okay, fine. We're going to take traditional defined benefit plans. We're going to make that contribution flexible now. Basically, the way that they did this is they created a surplus account inside defined benefit plans. So what happens is at the end of the first year, our actuaries crunch the numbers and they send a letter to the client. Congratulations, Mrs. Client. It is time to fund your defined benefit plan for the first year. The minimum obligation, and I'm around here, is $54,500. Remember from the previous page, it targets $116,000. The maximum deduction allowed by law for this year is just under $146,000. Please fund your plan somewhere within this range. And we explain to the client this is how it works. Client had a really good year, and they decided to fund the plan at the maximum. They put in almost $146,000. How much of that was deductible? And the answer is all of it. If that person is in California, they might be in a 50% tax bracket. Those are huge savings. So year 2 rolls around, out goes the letter. Dear Mrs. Client, it's time to fund your plan. Look at the minimum versus the maximum. Again, target's 116. Client had another really good year, and instead of funding at the maximum like they did the prior year, they're just going to do level funding and put in the same amount that they put in. Look at year 3. When we explain to the client that we want them to aggressively fund the plan for the first 3 to 5 years, depending on their age, in order to have that surplus account give them the flexibility that they need, we also explain to them that they should never skip a year of funding. Basically, what they've done is they've built up this surplus account inside their defined benefit plan. If they did fund 0, what do you think year 4 would look like? Year 4, their minimum contribution would probably jump back to $50,000 to $70,000. So if they're having a bad year, we still implore them to put something in the plan. Put $5,000, put $10,000, put something in the plan to help maintain that surplus account. Because of this change, traditional defined benefit plans and cash balance plans are making a resurgence. But funny enough, so is the 412. So the 412 plan is also known as a fully guaranteed or fully insured defined benefit plan. It's the same thing as what we just looked at, but everything is guaranteed. Therefore, the investment is a fixed annuity. If they want to use life insurance, the life policy is a whole life policy. We've actually designed a limited pay whole life policy specifically for our defined benefit plans. It's not even available to the public. It's only available inside of our qualified plans. The thing about the 412 plan is that the contributions are that of the olden days. That contribution is required every year. Because if I'm going to guarantee everything on my side, you have to guarantee the premium on your side. Take a look at this example. Typically, your owner is older than your employees, and typically your owner makes more money than their employees. Here is a 412 plan. The annual contribution, call it a rounding error. You're talking about $200,000 a year going into this plan. So, Mrs. Client, how about me showing you a defined benefit plan where your annual contribution is $200,000? That means your tax deduction is $200,000. Oh, and by the way, I'm going to let you keep 95% of the money anyway. Could you imagine that? We did a conference call once. It was me, the client, the agent, and their CPA. They wanted their CPA on the line. And we showed them one of these plans. The client, on the phone, asks the CPA why they never showed him this. Why were they sitting in a Sep Ira? I am not a CPA, and I do not know anything about taxes. That's not my forte. Well, the same thing with a CPA. He doesn't know qualified plans. She doesn't know qualified plans. They don't have all of the answers. We're here to help them. Another thing about that is if you know CPAs, they're a great working tool, meaning center of influence. One of the things about 412 plans is a lot of people think, well, okay, if I'm going to do a 412 plan, I'm going to fund it with the annuity. But if I add the life insurance, all I'm doing is increasing the plan cost by the life premium. That is not the case. So if you look at the green side is annuity only. On the blue side we've added a life policy with $2 million of death benefit. Look at the difference in plan cost. Now I'm going to come back to this screen, but here it is. Once you factor in the taxes, the plan cost between the two different plans is nominal. So the way to sell a defined benefit plan or a 412 plan with life insurance is just to sell the 412. If they can get the concept, if they can agree to the 412 plan and its parameters, then, well, there's one more thing we can do. For an extra couple of $1,000s a year, how about we insure this thing for $2 million? What do you mean insure it for $2 million? Well, if you put a $2 million life policy in the plan and they pass away tomorrow, right? That's where life insurance has its greatest rate of return. Well, if they pass away tomorrow, all they get is whatever the balance is in that 412 plan. This way, the 412 plan will pay out the life insurance to the beneficiaries, and you have a retirement plan. You're still giving it to those that you love. The other thing is, take a look at this for a minute. Don't get me wrong. I absolutely want that annuity commission. But would you rather have the annuity commission or the life commission? Just food for thought. I know you can't see me, but I got both hands up on the life side. I think the life makes all the difference. Okay, who do we talk to? We have a saying that you should make it a habit to mention pension. You should be talking to everybody. With a 412 plan, because everything is guaranteed and everything has to be ongoing, meaning that contribution is an ongoing, non-flexible contribution. You're typically looking for health industry, lawyers, successful real estate agents, sole proprietors, consultants. I live in Texas, so we have tons of people that have made a career in the oil industry, are sitting on a fat pension, but now that they're retired, they're consulting, working half the hours, making twice the money, but they're getting taxed as a sole proprietor, and it's killing them. Another great opportunity. You're looking for people that can afford that consistent contribution. With that being said, as I mentioned, if you know CPAs, do a luncheon. Pay for the luncheon. Tell the CPA you want 5 people for your first time. I mean, however comfortable you are. I need small business owners that either have a tax problem or have not saved for retirement, or both. The CPA is going to fill the room with warm, qualified leads. They trust the CPA trusts you. We've got a nice circle. Also, as I mentioned before, you have a book of business. You're always trying to stay relevant in that book of business. If you have a client and she has a need, you want her to think of you. You know what? Let me give Jonathan a call. I bet he's got an answer for me. And the way you do that is by reminding them that you're still around. Here's that opportunity. Go back through that book of business. You know, Mrs. Client, we've done business in the past, and thank you very much. But we still haven't talked about your retirement plan. Oh, well, I didn't know you did retirement plans. Whose fault is that? Whose fault is it that your client doesn't know that you can solve their problems? Because if you can't solve their problems, they'll find somebody who can, right? But the other thing is, when you first entered this industry and you had to sell your first life case, do you remember filling out that application? That was fun. But my point here is, you went into this industry and you were nervous, you weren't sure of yourself. Eventually you started making some sales. Eventually you bought a life policy for yourself. Next time you went and spoke with a client, you had conviction. You know, Mrs. Client, I actually have this myself. The same thing applies here. I challenge you to set up your own plan. See how it works. The tax advantages, the retirement savings, the commission. At American National, if you set up your own plan, we will waive the $600 setup fee. If you have 3 plans on the books, so yours, you bring 2 more, we will waive your annual administration fee as well. Compliance is not on this call, so I'm going to tell you you're going to have a free plan. There are no administrative fees associated with your plan anymore. Now, if the variable annuity does have fees in it, and we'll discuss that in a little bit. I've gone over a lot of information here, and I'm not done. I'm not done yet. But our goal is to make this as easy for you as possible. I mean, that's my job. I don't make commission. I'm on salary. I'm not on your applications. I'm not splitting commission with you, but I'll tell you what. Everything I just went through, you don't need to know it. All you need to know is American National does qualified plans. You send us a proposal request and census form. You bring me the client. I will design the plan. I will have you ready and prepped to make the presentation yourself if you would like to. Otherwise, we're going to set up a conference call. I'll sell the plan for you. I will do everything for you. I just won't take your commission. You bring me the client, I will sell the plan. That's all you need to know. So how do we do that? Well, the way we do that is because at American National, we're a one-stop shop. We design the plan, we administer the plan, it's our assets in the plan. It is a turnkey solution. So I don't have to worry about a third party. I don't have to worry about anyone else that we're going to pull into the deal. It's just me, you, and the client. We have a design questionnaire. This is all it takes. On the design questionnaire, we need to know who we're dealing with. If they know some of their goals and objectives, we give them the opportunity to tell us. You know, the funny thing is, we ask them what kind of plan they're looking for, but ultimately the very last box says, you know what, check here, we'll do the rest. We're going to design the best plan for them anyway. During the presentation, if we need to pivot, absolutely, let's pivot. But we're going to design the best plan for them, customized, specifically for them. If it's a takeover plan, we need to know what it is and some information about it. And then we actually have to have their existing paperwork, and we will assist you with that. But for takeover plans, it is a lot more involved. The last part of the questionnaire is the census. I have to know who I'm dealing with. I have to know what I'm dealing with because plan design depends on it. But once you get the census, keep a copy for yourself because now you can cross-sell. You know who the employees are, how old they are, you even know how much money they're making. It's an opportunity to make some cross-sells. You'll have another opportunity later when we actually set the plan up and you go into an enrollment meeting. So that's another opportunity to talk to all of the employees. But keep the census. Keep a copy for yourself. We run into clients that don't want to fill out the census. We need the census. And I always use the doctor's analogy. You walk into a doctor's office and you're like, Doc, man, I'm feeling horrible. You got to do something. I need a magic blue pill, right? Well, the doctor's going to cross the room to examine you, and you can't just, what? Oh, hey, don't touch me. I said, fix me. Where's my blue pill? It doesn't work that way. The doctor cannot help you until they know what's wrong with you. That's my census. I can't fix you until I know what I'm dealing with. We need that census. So in our 401k plans, we use a group variable annuity. Now, before everyone goes crazy, you don't need to have a securities license. Our group variable annuity is non-registered. All you need is a life license. The exceptions are New York. Product is flat out not available in the state of New York. Anyone who's done business in New York understands why. Second, the states of Massachusetts and Connecticut say, I don't care what the law says. If you want to sell that product in my state, you have to be securities licensed. Hey, it's their state, it's their laws. Other than that, any other state, all you need is an insurance license. What Morningstar does is, because you're only insurance licensed and there's 52 investment options in this 401k plan, you can't really answer the client's investment questions because you're not securities licensed. We partnered with Morningstar. Morningstar will give each person one free allocation. If they want Morningstar to actually sign on and be a fiduciary of their account and actively manage their dollars, Morningstar will charge that individual 50 bips, which is 1/2 of 1%. If you've ever done assets under management, 50 bips a year is a good deal. So the reason why we encourage Morningstar is because there is no charge to the client to have the Morningstar contract available. The charge is only to individuals that actually utilize their service. But this way, they can set up the plan with the knowledge that there is professional investment advice available if needed, without them having to go and find it themselves. At American National, we want to make sure you're ready. So again, really all you need is me as a resource. But if you really want to gem up on this stuff, we give you that opportunity as well. Whether it's through resources like pre-approach letters and phone scripts, or just literature in general. Everything is available on our website. But with that being said, Jim has everything as well. If you need anything, give Jim a call. Give us a call. We will make sure you have everything you need. I'm one of 3 plan designers at American National. Bob Klein is my boss. Between the 4 of us, we have over 100 years experience in qualified plans. So if we don't know the answer to your question, I'll go to a colleague and find it, or I'll have to research it and find it. But my point is, we have a vast knowledge base when it comes to qualified plans. I know I've said it before, but I'll say it again. We've gone through a lot today, but you don't need to know it. All I need is that proposal, request, and census. Bring me the client, and I will help you sell the plan. I want to thank you very much for having me today. I want to thank you very much for listening today. If there are any questions, Jim, are you there?
I am. Yes, we actually do have a couple questions here, and thank you very much for your presentation today. A lot of good information, and I'm sure as they review this, there'll be some questions that come up. But you did mention the securities license in a couple of states, but someone wanted to know, when you, in order to sell the plan, or you have to be contracted with American National, is there a separate contracting to do that, and product training? Can you talk about that a little bit?
Happy to. Thank you. That's a really good question. The answer is no. As long as you are contracted with American National, there is no separate contract. There is no additional product training either. So as long as you're contracted with us, this is available to you.
Good. It makes it easy.
We try.
And then another question was, as it relates to the census. So they do need to fill out pretty much every piece of information on that. How can that be submitted? Is there a certain way that's done, or is it just emailing the form over? Is it that easy?
I used to have a different answer, or should I say, today I have a different answer. The reason is we're still not back in the office, so I can't accept the fax right now, because if you fax it, it's going to sit in the office, and we are on a rotate where we send one person in the office once a week to check the fax machine, to check mail, and that kind of stuff. But I would rather you either submit it directly on our website or email it to me, or there is an email address, our general inbox, if you will, that is on that form as well. Actually, It's right there on the slideshow. It's pension at
Right.
pension proposals at americannational.com is the general inbox. So preferably the email, just because of the crazy times that we're in.
Sure. And what is a typical turnaround for a pension proposal?
Once we receive
time,
the pension,
like,
once we receive a pension proposal request, we'll send out an email letting you know that we've received it. We'll tell you who's been assigned the actual plan, because there's multiple plan designers, and the email will tell you that you should receive a response within 1 to 2 business days. Now, because of the change in the law, we're actually very busy right now in January, trying to set up 2020 plans, but it's still, I mean, we're within about 1 or 2 business days. If it's 3 days, just, I apologize, but please allow us that leeway. Once we get the illustration, we get it back to you. It's a matter of setting up the following appointment with the client. We do the following appointment with the client. Once the client wants to move forward, these plans can take, on the short side, I'm going to say 2 weeks. And that's really quick. They typically take 4 to 6 weeks to set up, just because there are requirements. For example, we have to email the client before we even set up the plan, requesting verification of the plan parameters and making sure that we've done everything that they've asked for and the plan is going to do what we said it will do. So 2 to 6 weeks is a window of, from getting it started to actually getting the plan implemented. Takeover plans can be a lot longer. But it all just depends on how quick the client is in responding to setting up the plan.
Sure. I've got one last question here. One of our attendees wanted to know what is the most common, well, not common, but what is the plan that you set up the most? Say in the last year, what type of plan would set up the most at American National?
Thank you very much. I normally address this in my presentation, and I didn't, so thank you very much for the question. The vast majority of the plans that you're going to set up, I would say 90% of the plans you're setting up are safe harbor 401k. Now, I'm not including single person 401ks, but other than single person 401ks, your safe harbor 401k is the vast majority of your business. About 10% of your business is going to be defined benefit plans. Of your defined benefit plans, maybe 1 out of 10 will be a 412 plan. It's just because, for the 412 plan example, I was showing you a $200,000 annual investment, considering you have to do that for 10 years. Well, it's a fixed contribution. Your client just guaranteed me $2 million over the next 10 years. And in today's environment, that's just a very hard sell. So vast majority is your safe harbor 401k. You'll get some DBs in there. And normally if you're setting up a defined benefit plan, you're always going to set up a 401k to complement it. So you'd run 2 plans together. And then, the other thing that I would say about defined benefit plans is there's, depending on who and what circles you work in. If most of your clients are doctors and lawyers, you're going to sell more defined benefit plans. If most of your clients are mom and pop shops and your small 5 or 10 person businesses, then you're going to sell less defined benefit plans. Thank you.
Yeah. Okay. Well, thanks so much for your information, your expertise, Jonathan, and we certainly appreciate that. And I want to encourage everyone, if you're not appointed with American National, to consider them for a number of reasons. Of course, the pension program, as Jonathan mentioned, no special contracting, no special product training, so it's a standard life and annuity contract, which we offer here at Financial Brokerage, of course. So if you want more information, have some other questions that come up afterwards today, please let me know, and I'll get an answer for you. And also, if you would like to get acquainted with American National through us, please let me know that too, and we can help you in that process. So again, Jonathan, thanks so much today. We appreciate your information and answering the questions, and we look forward to working with you again.
Wonderful. Jim, thank you very much for having me, and thank you to Financial Brokerage for having me.
Everybody have a great day and a good week.
You too.